Hi everyone, in today's video I am going to show you my exact thought process and step-by-step process on how I am planning my next property investment. Now I had made a video way back 1 year ago where I had told you how I bought 3 flats in Bangalore at that point and made almost 1 crore in profit. Right? I showed you that I bought 2 flats in October 2023, how I sold both of them, for one for 80% profit, the other one for 100% profit, and then I bought another flat in Devnalli. So today we're going to show you a brief understanding of how all of this happens, and I'll tell you what is the thought process behind this. Now, my old flats that I bought way back in 2021-2022 was also a bit lucky, only because it's not just luck, but there was also timing. I had timed the COVID cycle properly, right? When the whole COVID situation had happened, interest rates had fallen to all-time low, and whenever the interest rate falls down, people will go and start buying homes. So housing demand usually goes up at that point. So I basically planned that point perfectly. Obviously, I did not know that the returns would go up so fast. And for all the people who are in Bangalore who would know this, and not just Bangalore, we've seen this phenomenon in Bangalore, Hyderabad, Chennai, even Ahmedabad for that matter, that the property rates from 2021 to 2025 went up very, very, very fast, right? In most places. So usually what happens, it goes up fast in a particular area, then saturates and then goes up in the normal pace. So that is what happened in the 2021-22 phenomenon at low interest rates. Now we have come a full circle. We're back in 2025. Inflation is at an all-time low, and that is why RBI decided to reduce the interest rate again. And today, the SBI home loan rate, which I'm currently paying for my existing home loan, is 7.15%, which is very, very, very attractive for home buying again. But buying a home, there are multiple different steps, and today we're going to look at each and every step of how I think. Now, the first thing that I always think of when I'm taking a home, right? First is either take a plot or take a residential property. So what is the purpose of buying? Is the purpose of you buying a house to stay in it? Then it is also considered as sunk capital because you're not going to make any ROI from that house. Second, am I going to buy it from an investment purpose? So investment purpose, obviously plots are better than residential house, but I usually prefer buying residential houses than plots because I get scared while buying plots. And if I go to a plotted development, which is let's say Prestige Shobha, they're usually marked up and very premium, right? Obviously both has their cons and pros. Obviously it would be better to buy plots, but I prefer going for the buildings, right, which is residential properties. Now coming to the residential properties which I usually like buying. What do I do here is I usually buy these residential properties in the pre-construction era, like when it is getting constructed, and I usually try to sell it at the time of OC or at the time of possession and give it to someone, and they become the first owner of the house, or they become the first entry of the house, right? Usually people have this notion that they want to be the first person entering the house, they don't want somebody else living there. So that is one thought process, that you buy it in the construction phase, ensure the construction is over, whatever markup comes in the next 2 years, take it and walk away. That is one way. The second is, if it's a very good project, you've got it at a very good rate, then you believe that project will go on for a few more years and the upside is still pending, then you can wait for that, get the OC, do your registration and give it up for rental. You will get, as you know, 2-3% yield. I think 3.5% or 3% yield is what the residential property gives. But I'm playing on the upside of the appreciation because I believe that the game is yet to be played. So that is the analysis I do. So my process of buying is very simple. For today's video, I'm going to look at how do I buy a residential flat and how do I choose that, right? And am I going to choose exit or am I going to choose rental is also what we will discuss in today's video. Now, the first thing that I like to look at before even buying the house, before even looking for it, the first question you should ask yourself, are you even ready to buy a house, right? And the best way to do this to look at something known as salary to EMI ratio or even savings to EMI ratio. Let's say that my salary today is 1 lakh rupees, right? My EMI should not be more than 20,000 rupees. Okay. So if you do the reverse calculation, you'll know exactly how much to buy the house for, right? So if my salary is 1 lakh per month, 20,000 rupees per month should be my EMI because I have other expenses like rent, etc., etc. But if I can, I have a higher salary and I can increase my EMI to 40,000, then obviously you get a slightly better place. But if you feel that, Shashank, I'm not getting anything in this range, then absolutely don't buy a house. Just stick to equity investments, grow your money, and then eventually think about going to a house, right? Both are completely different asset classes. So let us not compare stocks versus real estate. I'm not that kind of a person who comes and says, don't buy real estate. I love buying real estate, right? So this is basically how I would look at. Now coming to my example, okay, I have opportunity right now where I can take up to 70,000 rupees EMI I can do very easily, right? If you see my previous video where I spoke to you about my income sources is quite high. So that is why I can take an EMI up to 70,000 rupees. And my down payment would be the standard 20% down payment is what I would pay. Whatever the down payment amount is, in Bangalore it works like this, where you give 10% upfront and then usually you pay over construction linked payment schemes and then you pay another 10% by yourself. So usually 20% down payment, 80% is loan amount. Now, a lot of people will say that Shashank, if you take 80% of loan, then you are paying a lot back to the bank will make more money from you, your cost of property will become very expensive. And that is why I told you the first purpose, why are you buying the house? If my intention is to buy the house and flip the house, buy fast, sell fast, then I am just using the bank's money as leverage and then I sell it fast with the appreciation. So bank is giving me capital at 7.15 rupees or 7.15%. I have to ensure that my property grows more than 7.15%. Let's add your let's add your taxes, let's add your registration cost, all the other costs that go into this. Let's say 7.15, let's say my cost of acquisition is 8%. Now, if my cost of acquisition is 8%, I need to find a property that can grow at least by 10 to 12% per year that can give me some good appreciation. Obviously, I would want to go for a higher appreciation, but this is the arbitrage I'm playing. I'm using the bank's money to make 4-5%, but on a very large capital base, not on a small capital base. And this is what I did last time also, where I bought the house and within 2 years I sold it. So the bank did not make a lot of interest from me, but they sanction it, I pay all the fees and all of that is fine, but I make a lot more money on that transaction. Now let us go into more detail. If I have to go and check how much down payment I have to give. Now let's say I have a house of, let's say 1 crore that I'm looking at, or let's say my budget, I don't even care about the house till now, I have not finalized the house. Let's say my budget is 1 crore, I will have to do a 20 lakh rupee down payment. Let's say I go for a 30-year loan, mainly because I don't care what is the term of loan, 10 years, 20 years, 30 years, I don't care. This is mainly because I'm not going to keep the property and keep the loan for 30 years. I'm going to finish it in maybe 2 to 4 years max. It depends on when my entry and exit criteria. And interest rate right now with SBI is 7.15. So here you can see, if I put a 20 lakh down payment, my house value would be 80 lakhs. My monthly EMI comes to 54,000. As I said, I can go up to 70,000. So that means I can actually take a house of approximately 1 crore today, right? That means 20 lakh down payment and 1 crore house. So almost 1.25 lakhs ka house or 1.2 ka house I can take today, where I give 20-24 lakhs down payment and I have 1 crore of the house value to be taken on loan. Then a 30-year loan, my EMI would come to 67,000, no problem. That means 67,000, right? If my EMI is 67,000 and let's say I plan for a 2-year time frame, then I have to pay 67,000 into 24 months is what my outgo would be, which is approximately 16 lakhs. Out of this, as you know, in home loans, what happens usually is that majority of the home loan in the first few years goes to interest. Later on, it goes to principal. So in the start, the interest component is very high. Hence, I want to take it as a higher time frame so that, you know, it is okay from that perspective. Okay. Till now, we have understood, okay, what is the reason for buying it, whether it is exit or rental, salary to EMI ratio, and how much down payment to be made. Now, because I am doing only from an investment standpoint, I don't want to give a lot of down payment. I will only give 20% down payment. That also I will stretch as slow as possible, not to give 20% upfront, right? So a lot of people also have this scheme where you give 10% now, 10% bulk mein last mein de do. All that happens. So I would not want to give 20% because capital is king and I would want to grow my capital at a much higher pace, right? And I only buy these homes when I feel the interest rate is low. And right now, as you know, the interest rates are low. So it is a beautiful opportunity for me to buy. Now comes to the final part. How do we do location analysis? And then we will look at builder. First, location analysis. Now, I will give you an example of Bangalore itself. Now, if you look at Bangalore's example, this is where the Bangalore airport is. Let me zoom out a little bit so it is less cluttered. Now, I know that in Bangalore, North Bangalore is very interesting. Why? Because the airport has just come. There are a lot of other KIA, DBL parks coming, aerospace parks coming. And if I actually show you an example over here of my previous properties that I bought, it will give you a better example, right? So the last time when I showed you that video, I told you the third property I bought over here in Devnalli town. Okay, there was a company called Brigade Orchards, and this is where I got it for 1 CR at that point. Today, that same property is now worth 1.25. It actually went up 25%, and my home loan on this is 7.15%, right? But the appreciation in 1 year is 25%. So my arbitrage has come out very well. My other property that I had sold in the past was somewhere around here in this area. It was called Thani Sandra. I had two properties. In COVID time, I had bought it for 6,400 rupees a square feet. First property I sold at 8,700. Second property I sold at 9,800. Both of them I cleared it completely, made a good profit, took that capital, put it back into the above flat over here. These were two 2 BHKs. This Brigade Orchard is a big 3 BHK. So I'm basically trying to improve my odds of using higher square feet, and I'm also getting more capital on that as well. So capital base is very important, right? Now here's the fun fact. How do I analyze these properties, right? Now this area, a lot of it, sadly in today's world, a lot of it has become overvalued. For example, this area called Bangalore, okay, this has become the hot spot. Too much supply. Okay, there is Brigade Eldorado. A lot of people have come here, and the going rate here is 11,000 rupees to 12,000 rupees per square feet. This is what is going right now. Okay, going rate is 11,000 to 12,000 over here, right? If I go to Devnalli town, which is Brigade Orchards, which is here, this is currently going at 9,000 rupees per square feet. I bought it at 7,000. Right now, the Brigade and all of that is going for 9,000 to 9,500 rupees a square feet. Now, somewhere around here, which is close to the airport, right, there were some luxury projects that came out like Birla Trimaya, Tata, which is coming out right now. They went at even 13,000 rupees a square feet, which is absolutely stupid. It should not go at that range, but it has actually gone up at that blasting range, right? And most of the development that is happening in this area itself, this KIADBL region. This region is where most of the supply is coming. Now what is happening is most of the builders today are coming and saying they're getting supply here. Okay, so this area, a lot of supply is coming. This area already supply has finished. Now this area next supply is coming, and here very less supply is there as of now, but supply is coming in all these areas. For the future, that 40,000 jobs will be created, families will come. Abhi tak kuch nahi hai, nothing has come in yet, but the hype and the narrative is actually selling the places over here, right? Apart from this, we have the second hype in Bangalore. As you can, I'll show you one more hype that is coming, which is called the Queen City hype. Now Queen City is like the new futuristic city, and that is happening somewhere around here. And now all the builders in this Dodbalapura region to this region over here, everywhere hotspots are coming, where everyone is now coming up with new buildings to start selling. So again, it has become slightly overvalued. So what I like to do is, when I'm trying to decide which house to buy, I like to buy it at the obvious appreciation rate, right? I want that quick burst of appreciation. I don't want it to saturate. I want that quick burst of appreciation just before the next phase comes in, right? And that is how I basically plan my investments. So now I know that this range is going for 11,000 good properties, and this is going for 9,000. So from 9,000, this eventually will become 11,000 is what I assume, and this eventually will go to 13,000 in the next 2 years is what I'm assuming. I'm saying 2 years, 9,000 and 13,000, but this gap will basically narrow down, and I think this 11,000 also will become slightly more, right? That is what I believe in. Same thing happened over here. This was 6,400 when I bought, and today it is going at almost 12,000 rupees. 12,000 rupees it's going for, right, in the span of 3 years. So I believe that this gap will basically turn around. And if I had to look at the supply issues over here, too much supply. Too much means too much supply has come. Over here, barely any supply has come. There's only one prominent builder called Brigade. Hence, I went and bought my property here. And that time, I got it for 7,000 rupees a square feet. Now it is already at 9,000. But if I had to buy a new property, I would buy it pretty much in this area even today. If I had to buy, I would buy in Devnalli town as well, right? Mainly because this whole area today has become very unaffordable, and it has become overvalued for the sake of being overvalued. Same with Queen City, it has become overvalued for the sake of being overvalued, right? Given a choice, I would go much further away, but I would buy something over here. Now, coming to the point of how to buy, what to choose, and how do I look at the builder. I always prefer, because there is so much risk in real estate, I always prefer buying it from tier 1 builders only. Slight premium I will have to pay, but I will pay for that premium, whether it is Brigade, Prestige, Shobha, Embassy, is what I would typically look like. I would not go for Sattva, Purvankara and all of these. I usually avoid, because I also look at it from a time frame that tomorrow if I get stuck with some property, will my rentals be high or will it look like some stupid property after 10 years, right? And that is what I would look at. Now, if I look at my current properties that I have two properties, one which is in Brigade Orchards, right, which is equal to 1.25 crores, right, that I have over here, and another property that will take 3 years for possession, that is going to be worth approximately 1.9 crores, right? Totally these two will be around 3.1 crores as of today. Maybe in the next 3 years, once I get possession for all, it should be around 3.5 crores or whatever, right? And if I take a 3% rental yield on that, that should give me around 10 lakh rupees a year, approximately 75-80,000 rupees a month, which equals to I can start buying more free properties by doing the same arbitrage, right? But I always prefer buying Brigade, Prestige, Shobha, anything matters. Brigade is fine, Prestige is fine, Shobha is fine, I don't care. But if I go buy some Ram Vilas construction or something like that, I will start getting into a massive problem. What I do is I basically do a simple search. I just do flats for sale in Devanahalli. Okay, I'll show you this. I basically go to any site. You can go to housing.com, Magic Bricks, whatever's fine. And usually what is even better, try finding resale flats. Okay, if you're anyway going to buy in that same area, instead of buying it at first hand from the buyer, usually what happens, people from resale give it to you at a cheaper cost. They'll usually give it to you at 10-15% discount, because they would have bought at 5,000 rupees and they will sell you at 7,500 rupees, right? So ideally you should always buy it at cheaper rates. See, for example, you have Godrej, you have Vasanta Sky, I don't know, I would not prefer. Brigade Orchards is already here, right? And this budget is a bit too high, so let me just do 3 BHKs. 2 BHKs are also okay, right? And I'll keep the budget max at 1.4 just to keep it here. So now I can see this is that Birla Trimaya that I told you, which is before the airport, going at 9,000 rupees a square feet. Actually not bad, quite a good rate, even though it went for much higher rate. Embassy is available at 8,600, not bad. Lot of Godrej properties. Satwa is also there, which I'm not a big fan. Godrej is already going for 9,700, so I want as cheap as possible, right? This is Devnalli Ivory, 9,400, so I want as cheap as possible, and if I can get resale flats, even better. So this is one way I look at it. Embassy is absolutely fine. Embassy is not bad. So you can see this, right? Embassy Verde, okay, 1,300, December 30. So this is too long for me. I like usually 2 years of construction, not 4-5 years of construction to reduce my risk. So I want something that is either already ready, or give me 2 years away. So if it's already ready, even better. I can get some rental income and play the same appreciation game. Like for example, look at this. There is some Brigade Millennium, Brigade Orchards, 3 BHK apartment, 970 square feet, ready for 9,000 crore, 1.15. At a 3% yield, this should give me around 3,35,000 rent, right? I'm assuming this should be 35,000 rent. And you can check that, right? Flats for rent in Brigade Orchards. We can check this. Again, this is not a recommendation or whatever. I'm just showing you the process of how I think. You can do whatever you want, right? It is not. So here you can see that 3 BHK semi-furnished is going for 42. 3 BHK furnished, this is a different block, but it's going for 58. I don't think it'll be so much. It should be around 30-35K. But approximately 30-35, yeah, this is the range. 30K is the range that it should be there, which is absolutely correct. So I can actually buy that on resale. I can even go and ask for a further discount, get a discounted rate. Within 3 years, I can sell it off whenever I want and get 30,000 into 3 years, which is also great for me. And that kind of pays off my EMI also, because out of 70K EMI, 30K goes over here. Now, as I said, the main game here is not to sit and pay this 80% loan. If I sit and pay 80% loan for the next 30 years, I will lose according to maths. My game is to play that arbitrage. 7.15 home loan rate, okay? And my property appreciation should be 20-25% in, let's say, 2 to 3 years, right? If it goes up more, even better, because as I said, I bought it at 1 crore, now it's at 1.25. After a point, usually it saturates. Whenever there is a spike in real estate rates, it spikes up and then it goes up in a natural 8 to 10%, 6 to 8%, 8 to 7%, 8 to 9%, that kind of range. It depends on the area. Like for example, right now there is a metro coming all the way to airport, and then that will get shifted to Devnalli. So I believe Devnalli is not even saturated yet. I believe it should go to 12,000 eventually. So that is why I'm still looking at properties over there. I would love to go further away, but that is not possible. Another option is looking at South Bangalore. There is some new hype that new airport might be coming there as well, the second airport, because every city needs 2 airports. So that is also another place I'm looking at. But this is how I would play. I would not pay the loan for the next full years. I like flipping properties as fast as possible, because in residential properties, what happens, if you keep the property for a long time, it becomes old construction and the premium goes away, and people would rather buy a new construction in the same area. Hence, I only buy Brigade Shobha Prestige. That worst case, if I get stuck with that property, it will still get sold because it's Brigade Shobha Prestige. Obviously, plots much better to play if you can find a good plot and you can secure it. I'm a salaried guy. I sit in my office. I don't have political connections to go and fight for somebody sitting on my plot. But if you have that, the same strategy can be used in plots. But don't think of doing this, sitting with the loan for a very long period of time. Now, this strategy only works in low interest rate periods. That is when you should take advantage. 7.15 is there. If it becomes 9% tomorrow, my arbitrage becomes very less and I don't make that kind of money. And even the housing boom will reduce. So now, because the rates are low, this is the best time to play that arbitrage. 2 years, 3 years max. Find properties like that. If you have friends, find properties with your friends. Bulk invest, co-invest. Just simple arbitrage. 7.15 home loan rate. You play on at least 12% or 13% or 14% appreciation over a period of time. But play at bigger capital. See, because my capital here, I put 20 lakhs upfront and I'm taking a 1 crore net worth asset, right? Now, over 2 years, I will pay, let's say, over 2 years, I'll pay 16 lakhs of EMI plus loan. 20 lakhs is already inside. But when I sell the property at 1.3, 1.4, now that arbitrage after paying whatever my loan is, 30, 40, 50 lakhs I can make, at least 30 lakhs I can make profit in just 2 years by just taking the money from the bank, not from my money, right? This is profit I'm talking about. Yes, there is taxes, charges, all that is there. But either which way, you'll still make money, boss, at the end of the day. By doing nothing, you're still working on your core job. And that is what I truly believe in. So I hope you guys enjoyed this video, and if you have any doubts, any questions, let me know in the comment section below and I will definitely help you out with it. Thank you. Take care. See you. Bye-bye.